Tweet @TodaySOR.
Imagine indeed, a not-for-profit banking system that offered local branches for local communities and mortgage rates for as low as 1.1% fixed for 10 years. It's not pie in the sky thinking. It's called the public banking model, and Germany's biggest bank wants to help it to be introduced here. So how could it work? Seamus May, co-chair of the Public Banking Forum of Ireland, is with me in studio, and on the line, Harold Felsen, project manager at Germany's Sparkasse Bank, joins me on the line. As I say, good morning to you both. Harold, first of all, before we get into how this could work over here, take us through this public banking system and how it operates in Germany. It goes back a long way, 2 centuries in fact.
Yeah, good morning, Sean. Thank you very much. And first of all, thank you for the invitation to explain the Sparkasse model to the audience. As a preliminary point, let me emphasize where Sparkasse do come from. The Sparkassen were set up in Germany over 200 years ago as a microfinance institution for low-income earners. Since then, we have grown into one of the largest financial groups in the world, and one that successfully combines outstanding professionalism with a strong social mandate. The institutions of the Sparkassen Group operate in the market as independent and decentralized banks. And as universal credit institutions, we conduct all standard banking operations and provide basic financial services and personalized advice to approximately 50 million customers in Germany. We have some principles in our business model, and one of it is a business model and a legal form which ensure the supply of banking services to the wider public. That means we offer financial service to all people in the country, and we're obliged to it. A focus on the regional economy rooted in the business model and the so-called regional principle. Concrete, Sparkasse in Hamburg is not allowed to do a business in Munich. And we have a strong cooperation in our group, sustained by a common trademark and a joint liability scheme. And we have a decentralized structure, so a group-wide division of labor, and this is, as a result, we are working very efficiently. And yeah, that's Sparkasse, and it's a 200-year-old proof model, very successful, and we are working together with IRL, Irish Rule Link, over 2 years to give you the idea and the concept. And this is important. We don't want to enter the Irish market or open branches. We think together with Irish stakeholders that a shift in your banking system could be the way for better financial services in your country.
You're prepared to provide advice and guidance, I should say, about how the system might operate here.
That's absolutely correct, yes.
Okay, to turn to you, Seamus May, how would you want to take this forward?
Yes, Sean. Well, I suppose, first of all, it's important to put in perspective the reason that Ireland badly needs a fresh look at the banking model and why the Sparkasse is so important. If you go back to the banking crash, when there was a huge amount of state aid required to bail out the existing banks, which of course would have amounted to illegal state aid, both the EU and the Irish government undertook to bring competition into the market. And what we've seen since the crash is we've seen the exodus of Irish Nationwide, of Anglo-Irish Bank, of ACC Bank, ICC, Bank of Scotland, Ireland, and the EBS. So we now have effectively a 2 or 2.5 pillar banking system. And what we have allowed to happen by creating this effective duopoly is we have a ruptured banking system. It is hopelessly dysfunctional, and we've allowed it to turn into a parasite. It doesn't look after the interests of the indigenous economy. It's not looking after mortgage holders. We've seen week after week what has been going on. So if you look at the structure of the Irish banking setup, we have 95% of the Irish banking market is controlled by the pillar banks.
That's AIB and Bank.
Bank of Ireland, Ulster Bank. Now, go to Germany. That figure is 12.5%. The pillar banks in Germany, Deutsche Bank, Commerzbank, etc., have 12.5% of the market. What Harold is talking about, the Sparkasse model and the community banks have 70% of the German market.
One of the key things is it's a not-for-profit undertaking.
No,
is that right?
Sorry. Just let me rectify. Sparkasse doesn't have to work efficiently, so we have to earn profits. But what we do is that we retain our profits in our capital position, and the capital we don't need to fulfill capital requirements, we reinvest it into social, cultural, and environmental activities in the councils. And this is part of our common good orientation in Germany.
Yeah, but you don't have shareholders driving a share price to get dividends.
Yeah, that's a great difference. That's a great difference because we are not a profit maximizer, and so our policy is oriented on the common good and oriented on the people living in the regions.
Okay, now to come back to you, Seamus May, as I understand it, advice and guidance would be forthcoming from Mark Strass, but the difference is that they're not prepared to provide, from Sparkas I should say, they're not prepared to provide the money that this bank would work with in Ireland. So where would that come from?
Well, it's relatively cheap to set up a full-scale banking model across Ireland. We reckon is costing about 200 million. There's funding available from ISIP, the Irish Strategic Investment Fund. There's funding available from Strategic Banking Corporation of Ireland. The credit unions are literally rolling in money, and there's money available from the ECB and the EIB. It's not a money problem. It's a political problem. It's a decision that has to be made to bring in a public banking system, a public/community banking system that works for the people and that provides some alternative to the profit maximising pillar bank model.
Yeah, and to come back to you, Harold, the kind of mortgages that are on offer to customers of Sparkas Bank, I mean, is it really as low as 1.1% by way of interest rate for 10 years locked in?
Yeah, we have a highly competitive market in Germany, and so 1.1, 1.2, 1.3% in average is normally the price you have to pay for a 10-year mortgage, yeah.
So could you see something like this happening here, Seamus?
Oh, absolutely. In fact, we and others worked very hard with the incoming government, and we got the introduction of public banking, community banking into the programme for government. And arising from that then, there was a joint consultation between the Department of Finance and the Department of Rural Affairs. That took place last March, and the Public Banking Forum was among a number of outfits that put in extensive submissions. Now, we now await the outcome from the Department of Finance, Rural Affairs, to see what they have to say, whether they support this model or otherwise.
The central bank seems to be quite wary of it, as indeed does the department. I mean, I think Philip Lane, the governor of the central bank, saying that there is a danger that you would be okay, all very well to have a local bank, but you could be susceptible to local shocks. The department seems to take the view that if the state is funding it, well, the state would need to have managerial involvement, would it not?
Well, the state won't be funding it. I mean, for example, the credit unions have the capacity to fund this themselves, but they need to sit down and talk to the Sparkas people, because the Sparkas model in Germany is the tried and tested model. It has withstood 2 world wars, a huge number of financial crashes, and it works. And it works because it's local banking for local people and local enterprise. And if I could just say what the Competition Authority had to say about the banking structure, they said that the challenge for policymakers is to clearly distinguish between the interests of the banks, which can be expected to strongly resist restoring competition, and the interests of consumers and taxpayers, which lie in the maintenance of a stable and competitive banking system. Now, we know the pillar banks have the ear of the department and the ear of the central bank, so I wouldn't put a lot of store on what they have to say.
A department that has still, I think, 75% ownership of AIB Bank, which it may want to shift, it doesn't necessarily want to do anything to undermine the value of that.
Well, exactly, and the department and indeed the government should be asked why Irish banks are charging such high rates. Irish banks are at the moment charging nominally double what the average interest rates across Europe are, but in many cases this goes up to quadruple. So Irish micro enterprises, small and medium enterprises, we cannot compete with our counterparts in France and Germany when they're paying half and sometimes quarter of the interest rates that we in Ireland are paying.
Yeah, but I'm just wondering what would unlock that situation. I mean, you talk about the credit unions. I mean, if I just saw a leaflet for credit union in here, you can get a loan, but it's like it's 4.95% interest rate. Now, what is going to persuade credit unions to start lending you your money at 1.1 or 1.2%?
Well, the credit union model as stands is basically unsustainable, particularly with the low interest rates we have, because credit unions are taking deposits from members, and then in turn have to deposit those with the pillar banks, and they're getting a negative return. So, I mean, this cannot go on. The credit unions... and
how much have they got? I mean, I think they have something like, is it 15 billion capital themselves at the moment? And you're saying about half of that is with the pillar banks on negative interest rates?
Yeah, or more. I think there's more of it, more than half of it with on deposit with the pillar banks. But like it's the government. Well, it's both the credit unions' fault in a way, and it's the government's fault because the credit unions have been suppressed for years. They're not allowed to loan money to limited companies. They're not allowed to do long-term loans. They're not allowed to do mortgages. How are they supposed to work? And basically, the government is attaching dissimilar conditions.
Well, when you see some of the examples of where things have gone wrong, maybe it's no bad thing that there are limits on. I mean, there have been some spectacular failures. Maybe not many, but nonetheless.
Sean, if I could come in there now on that, that's not really true. The bottom line is that 1% of our credit unions have had difficulties. Rush, Charleville and Newbridge. 1%. Our entire banking system has gone spectacularly bust. So it's a very, very unfair to go after the credit unions for lack of supervision when the amount of problems have been minuscule.
And to come back to you, Harold Felson, as I say, project manager at Sparkas Bank, if there is a pilot scheme set up, I mean, initially the idea would be what, eight branches or eight public banks in Ireland, but you want to set one up, or you're prepared, you reckon the place to start is to do a pilot project in the Midlands?
Yeah, that's true. Our proposal is to set up 8 to 10 Sparkassen, independent Sparkassen in Ireland with their branches. And in our proposal we submitted to the Department of Finance and Rural Affairs, we are proposing that the Midlands could be the first pilot Sparkasse for Ireland.
And who would run those?
They would be run by the municipalities and the city councils. So this is part of the discussion. We have to establish a special public banking law for Ireland. We have it in Germany as well. And that's what I'm working on with Professor Odell from Trinity College. We have to work out the special needs for your country. And so then we have to adjust accordingly to your needs the Irish Sparkassen model. There is no blueprint. We have to, it's a work in progress.
When will you see a decision, Philip May?
James, sorry.
Seamus, a big part.
We're all currently waiting on the outcome from the department to see what they have to say in relation to the introduction of this type of model. But could I say, Sean, that the banking model in this country is so ruptured that there's actually room to set up a post office bank alongside the public banks. Now, it's the view of the Public Banking Forum that public banking can't succeed and won't succeed in Ireland unless it's done in collaboration with the credit unions. And like we would appeal to the credit unions, to both the Credit Union Development Association and the Irish League of Credit Unions, to the Credit Union Managers Association and to the members to engage now, because now is the time when the credit unions will be left behind if public banking goes ahead without them. And really, credit unions are in the driving seat here because they have the infrastructure on the ground.
From your contacts, your lobbying efforts, trying to find things out, what's your sense as to where this thing is going, or is it going anywhere?
I'm very confident. We have everybody in the Dáil bar Fine Gael, and with Fianna Fáil, while Fianna Fáil hasn't wholly endorsed public banking and community banking, there's a large number of influential Fianna Fáil people, and there's more coming on board every day. So I would be very confident that we will make it.
You might as well, as long as this Fine Gael-led government is in office, it's going nowhere. Is that what you're saying to me?
Basically, unless we can. In fairness to Dr. James Riley, he attended a presentation to the Finance Committee a couple of weeks ago, and he was wholly endorsed the introduction of public banking, so every little bit helps.
Okay, we'll leave it there for now. Seamus May, co-chair of the Public Banking Forum of Ireland, my thanks to you, and thanks also to Harold Felson, project manager with Sparkas in Germany.
Today with Sean O'Rourke on RTE Radio 1.